Hey everybody, this is Phil Town.
And this is Danielle Town.
Welcome to the InvestED podcast. We are deep into the Buffett Annual Meeting.
Yes.
Are we not?
Well, we're coming to the end of it.
Yeah, we are.
Yeah. So we're all sort of off kilter right now. So this is the InvestED podcast. Did you say that?
Yeah, I did already. So let's go. Let's not be our normal self. Let's just go and do it. Let's dive in.
Great. Let's dive in
immediately. Okay.
We left off last time talking about just mentioning that where we were leaving off is the question about gosh, I don't know what the question was about currency. The answer was certainly about currency. And I can't remember what the question was.
And I think I said I had some graphs I was going to
because
discuss.
We were talking and you had some interesting sources, and I realized we don't really talk much about like following macroeconomic data.
And no, we don't.
I would
For
really
the prime reason that we don't talk about it because honestly, if I knew where interest rates are going to be in 6 months or 9 months or 10 months, I wouldn't do anything different.
Sure.
We just do the same thing all the time.
Okay.
So
I don't know, but then Buffett said, currency in circulation has gone from 800, let me get this right, 800 billion to 2.2 trillion, mostly in $100 bills. And I thought, I don't know what data point he's talking about. He clearly tracks it every week. He said the Fed publishes it every week. And that's something I don't look at. So that was just interesting to me that there's, of course, tons of figures and data out there that I am not going to track. But it's just interesting to know it exists.
Well, if you want to track it, here's how you do it. You go to Google and you type in FRED. That's Fred. So that's the Federal Reserve ED. I don't know what the rest of it is. And these are data that comes out of the St. Louis Federal Reserve. So it's Fred, and then you type in currency, or you put in Fred and then M2, or you put in Fred and Wilshire GDP. So those are all things we kind of pay attention to.
Well, my question is, why is Buffett paying attention to this number? Why is it interesting? Currency in circulation.
Well, the first reason is because they have to watch for inflation in all of his companies, and operating problems occur from inflation, right? So you need to be ahead of it a little bit and understand what's coming down the road at you. And when we have 800 billion US dollars, 800 billion US dollars floating around in actual bills.
Yeah.
And that's in 2012. And then in 10 years, they add another 800 billion and another 800 billion. So here you are in the whole history of the United States. They've never had 800 billion until 2012. And then by 2022, they doubled it and then did it again. They put in another 800, then another 800. And when that happens, you have all this money floating around in the form of, in this case, $100 bills. And yet it isn't super apparent in inflation. Right? From 2010, 11, 12, 13, there was no inflation really.
So he's looking at the reality of how much printed paper cash. This is what this is. Currency in circulation is printed paper cash, right?
Yeah.
So
where'd it go?
So that's what he's looking at, right? That's the concept here. Okay.
Where did it go? And
he said it's mostly $100 bills, not smaller bills.
Yeah.
Which to him, he decided meant that people are hoarding money,
They're hoarding it.
Stacks of $100 bills.
Right. So think about this
very
process.
Interesting.
Well, think about the process. If you're trying to get people to buy stuff, which would stimulate the economy back in 2010, and you print $100 bills and get them out there through the government and all this other way, then there's more money floating around theoretically, but there wasn't, because people took the money and put it under their mattress.
Yes.
And so they said, oh, well, that's not doing it. It's not enough. So they print some more, and they print some more, and they print some more. And they doubled the 800 billion to 1.6 trillion. And it's still under people's mattresses, but they don't know that. They just know it's not having an impact. So they print another 800 billion, and now it's up to 2.4. And now it's starting to have an impact. Okay, now watch what happens here, I think, is that as inflation, there's no inflation, so people have no real incentive to worry about prices going up, so they can keep the money under their mattress because it's not being diluted. The buying power is staying. Now, all of a sudden, you're in 2022, 2023. Inflation's running 6, 7, 8%. Oh, wait a second. I got to worry about this money that's under my mattress. I need to go do something with it. I need to buy something with it before it turns into nothing. And so now all this excess cash potentially can come floating out into the economy in a way that the Federal Reserve didn't want or didn't expect. And this could be one of the things that's causing inflation to be persistent despite the fact that they continue to raise interest rates to try to slow it down. There's just way more cash floating around. And honey, that's kind of just the tip of the iceberg, because we're talking about $1.6 trillion of $100 bills that's sticking out there. But when you go to the actual pile of money, which is called the M2 supply, that includes all the digital currency, all of that stuff that's digital is included in M2, which isn't 2.4 trillion.
Okay, wait. So that I just want to make that point there. So this is now a new data point.
New data point that includes.
And what we need to know is to go
currency.
look for something called the M2.
M2, Fred M2. And when you look at that, you'll be mind boggled because
They don't make it easy for us, do they?
when the currency is $100 bills and it's under mattresses and there's 2.4 trillion of it, you go to the M2 supply, which is the digital stuff.
Okay.
Right? This is what's showing in your checkbook. It's what's showing in your bank account. That's $22 trillion.
Oh, wow.
22 trillion. And what happened from 2012 to 2022 is it went from just a little over 8 trillion to 22 trillion. So you thought it was bad that they printed 1.6 trillion in $100 bills? Oh, that was nothing. They printed, quote, printed by digital currency, effectively another, 15 trillion dollars. 15 trillion, not 1.6. So it's really 10 times worse than what Buffett was talking about. 10 times worse. So currency is one issue. Digital currency, they exploded the amount of digital currency. In 10 years,
why is it 10 times worse?
Because in 10 years, they printed 67% of all the money that we've ever had in the country. And they did it in 10 years. And they didn't do it with increased productivity. They did it with just running a printing press, a digital printing press, which means there is all this piles of money out there. And it's starting to be reflected. You're starting to see it in the way people spend money when they don't want to keep it or they don't know where they should put it. I mean, we were just talking with somebody last night that collects watches. And Rolex watches have gone off the chart in their prices in just the last 10 years.
Most luxury goods have.
Yeah, most luxury goods have. What's that from? That's from people getting more money than they knew what to do with because the printed money ends up in the hands of people who have assets, not the people who need it, not the people who are poor. I mean, certainly they get the benefit of having a major league welfare program. But what happens when people are poor is they spend every cent they've got on basic necessities, theoretically. And then that money gets into circulation and is spent on luxury watches eventually. So automobiles going through the roof, watches going through the roof, real estate going through the roof, the stock market going through the roof are all reflections of this trillions of dollars that were printed over the last 10 years.
No, he didn't. I mean, I think he's talked about that, but he didn't specifically mention that in that answer. Mm-hmm. What he specifically mentioned was this currency that's in circulation in $100 bills, and he really called that out. And so I'm what am I trying to say?
What's the difference?
No, I understand the difference. I just think it's a point to me that he chose to talk about the money that's put into piles around the world, let's say. Is it around the world? It must be.
Yeah, I mean, America spends a tremendous amount of money. I mean, think of the $100 bills that were packaged up and wrapped in cellophane in the tune of billions of dollars and handed out in Afghanistan and Iraq. I mean, just huge piles of money.
Because his ending point was, he said, so cash is not trash.
Right.
In other words,
he's basically saying that people are, what people do reflects what real values are out there. And so if people are hoarding cash, it's proof that cash is not trash, that cash to a great many people is more valuable than any other asset right now. And I think since Warren is also sitting on $143 billion of cash,
so nuts.
It's just unbelievable, right?
Yeah.
I mean, that's a lot of cash. And he's basically telling us all.
Well, and his cash is the M2 kind of cash.
Yeah, his cash is M2 digital.
Yeah.
Current, right? And treasury, right? Treasury bills, all that kind of stuff. But he's basically saying, look, you guys, cash is not trash right now. I'm going to tell you, the shit is going to hit the fan. He didn't say this, but it is going to hit the fan. They don't know when. And cash is not trash because cash is what you need to buy stuff with that goes on sale. Huh. That's what I think he was saying. And his proof is that people are hoarding a tremendous amount of cash.
Because that's where I was a little bit what is he trying to say? Because with a massive amount of inflation, cash becomes less valuable. Therefore, the saying cash is trash. So his point was cash is not trash. Cash is in $100 bills, in people's safety deposit boxes, or in banks in the UK in or treasuries, whatever.
Right.
And it's not just cash, like we say that because we're American. It's US dollars cash.
Mm-hmm.
And so his point was that it's more valuable than we're all thinking. And I'm trying to figure out why he thinks it's more valuable than we're all thinking. Does he not think there's going to be heavy inflation?
I think he thinks that inflation at the rate it's going now will not overcome the buying power of the dollar when things crash. So in other words, it's better, since you don't have certainty about when the market's going to go down, your best choice is to put money, in my view, and I think in Buffett's view, your best choice is to put money into something that's sort of keeping up with inflation, but is highly liquid and you're able to get your money out of it very quickly, which would be U.S. government treasuries. And I'm quite sure Buffett has, most of that billions in treasuries, because treasuries are now paying roughly 5%. You can buy treasury bills that are, you can ladder them and always have liquidity at roughly 4.5% to 5%. Inflation's probably running six or so. So you're really not losing it at a very fast pace relative to the opportunity. It's an opportunity cost of being ready to buy stuff that's, 80% off.
Well, and maybe it's also in relation to other currencies with our extremely interdependent worldwide economy. Let's say if there is an overall inflationary, I'm losing my words today, not so good economic situation. I'm sure there's a better word than that. Maybe he's saying that because people have these, let's just say, stacks of $100 bills, because I enjoy thinking about that, that's what they're saving for the so-called apocalypse. And it's not British pounds and it's not whatever the other reserve currencies of the world
Yeah,
may be.
it's not euros, it's not yen, it's not yuan,
Right.
it's dollars.
Yeah.
And I think that went with another question. Didn't somebody ask him about whether the U.S. dollar is going to get replaced as a world currency or something like that? And
Yeah, somebody did ask him that.
and I think Buffett just said, either Buffett or Munger just said, there's nothing that can replace it. There's no other currency that looks better. I mean, no one trusts China, and they're not going to make that the world currency. And then what else is there? The euro is weaker than the dollar. The yen is weaker than the dollar, and that's it. You're done. So unless somebody invents a new currency that's completely trustworthy, and the problem is, even if they invent it tomorrow, it'll be a couple of generations before anybody believes it. It's right. I mean, you have to. The British pound was going down from World War I, and the U.S. dollar didn't become the world's reserve currency until after World War II. Yeah, that's a long time later. So even though everybody knew the dollar was stronger, actually making the shift was a big deal. It's a major paradigm shift. And there's nothing out there. I mean, the dollar was so obviously better than any other currency in 1920 when, right, the German mark was going exploding through the roof with inflation.
Right.
The British were drained from World War I. So, and were printing money. So, yeah, it was no question. And it still took 20 years. So, it takes a long, long time.
Like data points, charts, statistics that you look at in this vein. So we've got currency in circulation. How is it made up? Apparently Buffett looks at that. We've got the M2, all the U.S. currency.
Yep.
Anything else?
That's it for me.
That's it. Okay.
Yep.
Good. I like short.
Yeah. Pretty cool.
And then he also talked a little bit about banks. And not a little bit. They talked for a while about banks and whether or not they were decent investments.
And we sort of took away two different things from this, didn't we?
Yeah. So I wrote down that, first of all, as I mentioned last time, that Charlie agrees with me about banks not being good partners in the investment banking world. And they both said that banks with sound values can be a good investment. And they said it in a way where it was like, there aren't many of those.
Yeah.
And what you took away was that you really shouldn't be investing in banks?
What I took away and what I wrote in my notes was that that the banking sector is really a problem because deposits are not sticky anymore. And in other words, people can move their money digitally, literally instantly, as proven by Silicon Valley Bank, as the message went out through Twitter to all of the key investors everywhere in Silicon Valley that Silicon Valley Bank was in trouble. They literally pulled their money in minutes and moved it. And that didn't exist, even 10 years ago.
That's so true. Yeah.
Now today you can have a bank run. Bank runs used to be something that would build up.
Right.
Now it happens in seconds. So it's real interesting. I mean, depositors are completely safe because the government's going to step in clearly. So we don't have to really worry about a bank run. But on the other hand, you've got this problem of having deposits that are not sticky. The idea that banks have big moats, like that's going to keep you from moving your money from Bank of America to Wells Fargo, that just isn't the case anymore. You don't have to go down there. You don't have to. You can just move it.
Yeah.
Right. Yeah. And so it's like, holy smokes, how do we take depositor money and then invest it in something that gives us a better rate of return than the money we're paying out to the depositor if we can't invest long term anywhere? This becomes a really big problem.
It's like it almost forces a bank towards this short-termism that the stock market is dealing with. That's so interesting.
Which is why Buffett and Munger are both crying for regulation to come back on banks and to force them out of the investment banking world.
Yeah.
Because as they run into this problem, they're going to be more interested in doing those kind of gambles.
I couldn't agree more with that.
Yep. So they got guys who are running these banks who are trying to get rich when what they really should be doing, right? They're trying to get rich from their stock options. They're trying to be
bonuses.
It's just a whole different banker than Jimmy Stewart in,
Oh, right.
What was that movie that we always watch at Christmas?
It's a Wonderful Life.
Yeah, It's a Wonderful Life.
Which we never watched at Christmas.
Well, I think we always did. I don't know. I was always at Christmas. Okay. So Buffett was basically saying that they've been selling their banking stocks, and they have, except that most recent quarterly 13Fs came out and showed that Buffett has been buying more Bank of America. So that was interesting. He sold off the rest of them and bought more B of A.
Wait, was he questioned about that, or is that?
No, that just came out.
That came out right after,
That just
right?
came out.
Oh, it just came out.
Yeah.
Oh.
Sort of just out. So nobody could answer that question, but I wrote down that they don't have confidence in the sector, but clearly they have confidence in Bank of America, and they really like the CEO.
Mm-hmm.
So, and by the way, that's what banking's all about. If you guys are thinking about getting into buying into banks, it's very difficult for a bank to have a moat because it's all about the people who are running the bank. That's kind of the moat. Is you've got Jamie Dimon running J.P. Morgan, and he's brilliant.
Yeah. Mm-hmm.
And you got the guys who were running Wells Fargo a few years ago, and they were lazy and didn't pay attention. And I think Monahan at B of A is somebody that Buffett respects greatly, and is buying more right there. But I think when we were talking about this earlier, you were saying that where else are you going to put your money? I mean, to a certain degree, having $143 billion in cash is a problem, right? Because you really want to put it someplace. So B of A may be the best of a bunch of bad choices.
Like, what other investments could they make?
What other investments could he be making?
Got it. I was like, I don't know where else I could put my money, but I'm sure I could think of somewhere to put $143 billion.
And then he started going into, right after that, he kind of started going into all of our debt and said essentially that we have to change our behavior dramatically, and the situation isn't good. And that politicians shouldn't make rules about things that they don't understand, and they're absolutely doing that on a regular basis. In particular, Buffett was very critical of Biden trying to put a 4.5% tax on buying back your stock. But he said it's just we've become tribal, right? It's like you got the Republicans who hate the Democrats who hate the Republicans, and they're both basically printing money to buy votes, whatever administration is in there.
Yeah, they were talking about the failure of democracy.
Yeah. And you've got Bank of Japan as you sort of got Bank of Japan as an example of where things can go here, because amazingly, the Bank of Japan has something like 30%. They've got 85% of the exchange traded funds in the Japanese stock market are owned by Bank of Japan. Which is about 30% of the whole market. And they bought back almost all the debt. So it's like they can get away with it because they have a cohesive culture, Buffett said. And we don't. By a cohesive culture, I mean they're a monoracial country
when you
that's
say
on an
get
island.
away with it, get away with what?
Get away with having the central bank own the whole market. They're getting away with it, and also because they follow their leadership pretty well. Like, so it's a major saving country. They just save, and what that does is put real money, back in the hands of the central bank, the Treasury, which can then buy back stocks. So it's only because the saving rate is so astonishingly high in Japan, because of their cohesive culture, and that's what you do as part of the culture, that they're able to get away with this. If we try to do it, we're going to have to print money to do it. And that's exactly what we've been doing.
Try to do what?
Try to buy back, try to keep interest rates down, and get more money for the government to put money into things, continue to hold up the stock market. They're getting away with by the government taking action. And they have something like a 200% debt to GDP ratio. America has about 100% debt to GDP ratio. And we're in more trouble than they are because we don't have savers. And by the way, that's the 100% rate is where Greece went into the toilet back in 2011. And we're only getting away with that massive debt load because we are the world's reserve currency, and that massive privilege lets us print money without people running from the currency. They have to stay with the currency, even though it's a disadvantage to them. So what happens instead of people running away from the dollar into the euro or yen or yuan is they print more money themselves in order to be able to sell their goods to America. So it is not good. And Buffett is just saying this is madness to keep printing money. Destroying the world's reserve currency is madness. I mean, madness is what we're doing. And like, we're going to pay the price. So we've learned a lesson that we're getting away with printing money in huge gobs. And it is not a joke. We are going to pay a huge price for this. And he's basically pointing out that Berkshire has created a fortress, an economic fortress. They're better prepared than most countries. Yeah. And
really good point. Yeah.
Yeah. And so honestly, if you're really worried about this as much as you probably should be, Buffett is saying you should buy Berkshire stock and own Berkshire stock, and we'll get you through it.
Move to Omaha and join the country of Berkshire Hathaway that will be created during the wars.
There you go.
There you go.
There you go.
Omaha's nice. I like it there.
Are we
the
moving
winters
to
are
Omaha?
rough.
Honey, if you move to Omaha, you'll be so much closer to your daddy. I like the idea.
It's probably just about as easy / hard to get to as Zurich.
Probably so. Actually, you're probably right. Although getting to Atlanta is only a 2-hour flight from Omaha.
Oh, there's a nonstop?
Oh, sure. There's a nonstop from Atlanta to almost everywhere except Zurich. Except Zurich.
Yeah, I'm really glad you made that point because I forgot about that part. Yeah, he said that multiple times. He was really trying to give... I don't think he really cares about giving confidence. Like, that's not quite what he was going for, but he was trying to let people know how ready they are. Their money is safe. Their money is in a place where they think about how to keep it safe, where they have prepared, they've put plans in place. They're not messing around with the stockholders of Berkshire Hathaway. And I think he really wanted to get that message across. Charlie's 99. These guys know that they're living on borrowed time at this point, and I think he wants everyone to feel secure if one of them is no longer around.
Yep, 100%. So I think that's pretty the major things of the Berkshire meeting. They had things to say about oil and gas, but nothing really super that you don't already know.
Yeah.
Obviously, when they do shale oil, they run out quickly. So, but I think obviously Buffett feels like owning energy at this point in time is a really good idea because it will rise with inflation. I think that he was defending Berkshire's record on emissions and ESG and all of that.
Yeah, and particularly the energy in Iowa that they own. He got a question about that, and I liked his answer. He basically was trying to give a sense of the business realities that a business has to go through in a highly regulated, very expensive industry. And, he was basically like, it's not perfect. We're doing the absolute best out of anybody, and it's not perfect. But I
tell you what, just one, unless you've got more things you want to talk about, I thought he would really saying a really good thing. Buffett's and Munger are both, in their way, humanitarians and are very interested in seeing everyone prosper. I mean, Warren has said in the past that if you want to have a great society, just think about how you would design it if you were going to be born into the worst and least privileged segment of it. You would want it to be a society where you could prosper. Mm-hmm. And he was pointing out that when you go to world free markets, that it's the best thing because then everything gets cheaper around the world. But what happens when you do that is it creates quite a lot of pain for some people in your country. And we see that in America, where we have taken an enormous amount of manufacturing overseas, in particular to China. And the suffering that goes on from our middle and lower middle class is amazing. I mean, it's huge. There's just no jobs out there for people who don't have technologically skills or white collar skills. And Buffett was saying, look, free market capitalism helps everybody a lot, but inherent in the process is this pain. And so what you have to have is a government safety net that takes some of the pain out. And he said we should probably make those bigger. But here's the thing. If you take all the pain out, then you take out all the gain. You can't have a pain-free society, because then everybody stops working. And there's no capital there. You're spending all of your money paying people to sit around and watch TV, and you have no money available for investment in new technology and new drugs and new processes. So he said in Russia, they tried to take out all the pain in communist societies. And he says, he said in Russia, the old saying was, they pretend to pay us and we pretend to work.
Oh, yeah, that's right.
Right. So what our government has to do from Buffett's point of view is they have to keep the best aspects of capitalism, which incentivizes people to work hard and save, while keeping suffering to a reasonable minimum.
Yeah.
And he said that the United States has done very, very well. He said, if you look back 200 years ago, we were 0.5% of the world population. And now today, we're 25% of the world GDP. So even through a civil war, even when women were held down, and half our population wasn't being utilized. This progress doesn't come free. It has to be worked for. And so he's basically saying you can go too far. Mm-hmm. And I think he thinks that we're, with policies that the Biden administration is proposing, where they won't pull back on fiscal spending, they're overwhelming what the Federal Reserve can do to hold off inflation. And when they start to tax everything in ways that are stupid, they are reducing the incentive to go out and create a better society and more wealth. And so it's a balancing act. And what I think we're seeing is we don't have politicians on the national level that are capable of doing the right thing. And we're at the edge of what democracy can do.
Maybe.
And I think it's a big warning. It really is.
Yeah, I think so. And I remember he talked quite extensively about when Berkshire Hathaway's textile mill was losing money and clearly not going to be a viable business going forward. Mm-hmm. And he absolutely grappled with what to do on a humanitarian level, as you said, because they had so many workers. And he said they were mostly Portuguese and didn't speak much English or didn't speak any English. And they're 50 and not going to be able to learn another career or another trade. What do you do? And I know from reading back that Berkshire Hathaway, the company, kept that mill open much longer than they really should have from a business perspective. And he did that specifically to support the workers that were there. So he has made business decisions that were not
for
100% for pure profit. Exactly.
Right.
And I think he's having lived that. He's not just talking generally. He's not just talking about an idea. He's lived that over and over with multiple of his businesses. But I was struck that that's the one he talked about because that was so long ago. But that's the one that you could just see it. It was still emotional for him.
Yeah,
he still felt badly about closing that textile plant.
Yeah. They lived through that whole process. And interesting to me was it was Portuguese people in the Northeast that were doing that. And the jobs went to the South. I was thinking the jobs went to China or something. The jobs went to the southern part of the United States. And then they went to China.
Yeah. They're not there anymore.
Ultimately there.
But what I think, this is my conjecture. I think he kind of blames everybody, right? Like there aren't good people on the corporate boss side who are deciding whether or not to keep that plant open a bit longer until the people
Right.
can make their retirement or until they can learn something new.
Right.
And there aren't good people at the banks making long-term choices about quality investments that are
Right.
going to be able to be paid back, to make loans that are going to be able to be paid back. There aren't people on the other side making good long-term choices with investment money. Like, it's just all over the place. I think he's wishing people were making choices that were a little more in the middle, a little more humanitarian on the business side, and maybe a little more I don't know what the word is for the other side, but a little more maybe profit focused.
Well, I think Buffett
in
and
a more
Charlie
steady
and
way rather
Warren,
than in a gambling way.
Charlie and Warren are really great people, and the way they've lived their life, neither one of them lives with a lot of bling. Buffett's in a house he bought in the 1960s.
They don't live with any.
Yeah, I mean, they live good lives. I mean, don't get me wrong. We would all probably live better if we were Warren and Charlie. They
don't have one of those ridiculous, horrific yachts that the oligarchs have built. Like they are
17
those
houses.
Guys are not at all blingy.
They're family people. They're intellectuals. They love what they do, and they're great examples of how to live a really quality life. But I think they must look at the world and see the amount of bling that's going on in the richer part of the world, ignoring where that's coming from, because what it's coming from is borrowed money. You're borrowing against the future because the politicians they don't care about the future because they want to get elected next year.
Right.
And the business people don't care about the future because at the top of these companies, they've got the next 4 years to get rich. And then they're going to retire. Yeah. It's like, who's caring for the people who are not in a position to protect themselves? And the answer is nobody. There's so much wealth now that if you're not driving, really fancy cars and living in a big house, you feel like you should be. You feel like you're behind the curve. Mm-hmm. And so, I mean, I think we're running toward the edge. I really do. And of course, we can't ever forget Ray Dalio screaming from the rooftops that we're running for the edge and that we're at the edge, and it's going to be not good.
I don't like these extremely negative endings to our podcasts.
Okay, then we'll say this.
Yes.
Warren Buffett, and we're wrapped up on the Buffett meeting. Warren Buffett, God bless him. I hope he lives forever and that we get another meeting at least, and that we get many more, I hope, because he's incredible. And what he's done to change the world is hard to measure, but it's huge, really. There are thousands and thousands and thousands of people who become, financially independent because of Warren Buffett, because he taught us how to do this. So, I mean, really, including me.
Right.
Yeah, absolutely. So I think with that we can wrap
I think also just because he says all the negative stuff, but then he always says we have the opportunity to invest in wonderful companies. Mm-hmm. We can watch what's happening around us, and all we have to do is, what did he say? We have to choose the ideas that are, and know which ones are less bad than the other ones. So we can do that.
If you're not really sure what to do right now, you guys, I think you could do a lot worse. If you don't want to be in cash and you don't want to be investing your own money, I think you could do a lot worse than putting your money in Berkshire Hathaway. Yeah. I really do. Yeah. I would feel better about Berkshire than the market as a whole. What about you? You agree?
Yeah, okay. I would. I don't know what price they're selling at right this second. So I'm going to temper my statement. It's not crazy. But as always, so you've taught me well, depending on the price.
Depending on the price and value. Right on. All right, you guys.
Thanks,
with that,
everybody.
We'll be talking about something next week, something different. Look forward to seeing you.
Bye.
Until then, bye. Hi guys, thanks for listening to InvestED. If you enjoyed this episode and you want more information or to listen to additional episodes, visit our website at investedpodcast.com and sign up for my virtual workshop right there. Spots are definitely limited for this event. I'm not kidding. They really are. They sell out very quickly. So everything discussed on this podcast, by the way, is either my opinion or it's Danielle's opinion. And really important, it's not to be taken as investing advice because I am not your financial advisor, nor have I considered your personal situation as your fiduciary. So remember that. You're on your own here. This podcast is for your entertainment and education only, and I really hope you enjoyed it.